We've had this feature for a little bit now, but you do have the ability to create a journal entry and by copying and pasting from an Excel spreadsheet. You're going to fill in the whole header information of the journal entry. You're going to position your cursor into the very first field of the account number, that very first segment. And when you create your Excel spreadsheet, it's got to be a very specific form. This is the form right here that you have to use. It can be as long as you want. It can have as many entries as you want. And when you're done, then you're going to highlight in Excel that whole range of what that entry is going to look like. And then go back into your journal entry screen and click the paste button. Because your cursor was in that very first segment of the account number on the very first line of the account number grid, you are, it's going to populate all of that information for you. And again, it doesn't matter how long it is. You can put as much in there as you can. Keep in mind that transactions that have different dates are going to need to be in separate journal entries. You're not going to be able to add extra lines after the fact. So once you paste your first journal entry into this window, the paste button grays out and you will not be able to paste again. Check please, no invoice. A lot of times you don't realize that you really don't need to have an invoice to generate a check from a vendor, okay? Now, do you want to? Of course you do. But sometimes the check needs to come first before you ever get the invoice. So you want to make sure that instead of going kind of outside the box or entering a fake invoice that is really not the true picture of what has happened, you use the edit vendor payment window to enter an amount. In this instance, we're putting a $1,000 deposit down for Ace Travel Company, and I don't have an invoice yet. So I'm going to go ahead and process this check. What happens is that I end up with a credit on the Ace Travel Company vendor account. I want that. I end up debiting my accounts payable and crediting cash, which is also what I want. It's just that the invoice hasn't, part of this hasn't happened yet. So what I want to do is go ahead and process through this. But once my invoice does come in, I'm going to enter it, and then I'm going to marry those two transactions together so that I'm going to apply this payment that came ahead of time to this invoice that has now been posted. Whatever's remaining is remaining. So I may have a $9,000 invoice and I'm going to apply this $1,000 payment to it, leaving a balance of $8,000. That's perfect. GP has the ability to mass write off amounts of balances. They could be an overpayment or an underpayment associated to your customers. The key to being able to do this, though, is you have to make sure that in your customer maintenance options, that anything other than not allowed is marked. If you have not allowed, then no overpayment and no underpayment will ever be able to be written off. You have to fix that part up front for all your customers so that you've got something that you can control. As you're going through the process of, determining what the parameters for this write-up actually is, you can define that here in the main write-off documents window and then click preview. Once you click preview, you actually get to see exactly what GP intends to write off and what that write-off amount is. We had a $100 limit, so what we see on the screen here actually meets that criteria. Every one of these that's blue and underlined, obviously you can drill back on. So you can see exactly what's making up that $30.50, that $21.35, and see those transactions. And if you're not comfortable with writing those off, then you can uncheck the box to the left and remove those from this process. Once you click OK, you come back to this window and then click process. For underpayments, GP is going to issue a credit memo and automatically apply it. For overpayments, GP will issue debit memos and apply it to those overpayment amounts. Paid transaction removal. Your month-end close process should always include the paid transaction removal routine. This process takes all of your fully paid sales invoices that have a status of open and moves them into history. So Anything, of course, that gets moved into history then removes off your aging. So this gives you the ability to kind of keep your agings cleaned up, a lot easier to manage without a whole lot of stuff on them. And the whole process of eliminating those historical transactions then makes other queries and reports run faster, because it's basically pulling from open transactions, not from historical. So keep that in mind as as part of your month-end close routine. It's going to be really, really important for you to maintain your agings, as most of you always know. What happens if we find out later, once we've moved it to history, that it's been applied to the wrong invoice, or maybe it's been entered, that payment was entered onto the wrong account, and we've moved an invoice and payment over to history that doesn't belong there? Using the Professional Services Tools Library, or the PISTOL, as some people call it, we can actually do what's called RM transaction unapply. That essentially takes those historical transactions and brings them back into open, where we can then correct them as we need to. So when we select that option and we select the customer, we handpick the invoice that we want to unapply, and once we click OK on that, it comes back and we can move forward. So in inventory, you can, by default, POs default their cost from the current cost field in the inventory module. But sometimes on an inventory item, in some instances, you'd rather have standard costs be reflected. That's the cost that you want to go by on your purchase order. So the cost defaulter actually lets you define that in this utility to change from current cost over to standard cost. Now, the key to this is that it's all or nothing. You can't say this item is going to be standard cost and this item is going to be current cost. You're turning this on so that all of your POs that you generate are going to be based on that standard cost field. But the nice thing is that you can control what's reflected on those POs by pulling in that standard cost, something that we weren't able to do a long time ago.